Welcome back, guys, to another Zero DTE video, and today Ernie's going to be talking about trade timing, so make sure you stay tuned. If you're interested in becoming a pro trader, check out the link in the description where you can find Ernie's education platform. Enjoy, guys.
Coach, I'm still having trouble figuring out using the time period like 9:30 and 11 and then marking up and determining potential entries. How does that jive with placing your trade? Because wouldn't just the risk to reward be where you would make your determination as to entry?
It's a timing thing. So there are two ways. See, because we're trading out of the money options and trying to get that risk to reward, that intersection of price with the structural level in between that time is all about a timing thing to put on the trade, which you're going to put out of the money. And you're not trying to think about where your trade's going to go relative to the structure. You're putting it on when that structure is finding support at that time.
Okay.
Now, if you were trading the underlying asset, then you would be taking trades right when it hits that structure. So it's the same thing with the option. You're just taking the trade at the same time. It's just that it's not going right there. It's going out of the money because it has to.
Okay. So what would, I had asked you about this the other day, but something like Tesla here, how would you do a butterfly, or what would be your idea of placing a trade on something like Tesla?
With Tesla, I'm typically looking at putting it on Monday or Tuesday.
And why is that?
Expiration on Friday.
Oh, okay.
So it would be pretty much the same thing, although that would be hard to have judged here. I suppose you could have said, hey, put a position on right here on Monday, or even down here. You would have had a good reason to take it when it pulled back. But I typically don't really look at where it's going. I look at the direction, and I don't look at the structure that much. I might look at the structure if I was going to trade Tesla, but it's a multiple day to expiration trade. You're putting it like 3-4 days out. So You're really just trying to capture the volatility of the move. So really all I do is on Monday or Tuesday, when I get the gumption, I put up a trade for Friday expiration, and then just make sure that it has all the same characteristics that I would want in terms of risk to reward and the amount of risk that I want, overall risks that I want to take. In terms of buying the stock, though, the reason why I trade the options or the zero DTE is so that I can accumulate cash so that I can then buy stock. So right now in my account, I've got, I don't know, about 1,100 shares, and I've accumulated about $35,000 in cash. So I'm waiting to get up to about 50,000. Then I'm going to buy some more stock with that.
What kind of time frame do you use as far as going out with you try to go out as far as you can with the options?
No, I'm doing a zero DTE trade for Friday expiration. So I never have it on more than 3 or 4 days each trade. But I'm putting them on Monday for Friday's expiration.
Thanks for watching, guys. I hope you enjoyed the video, and if you did, make sure you hit that subscribe button and hit the like button below. If there's any questions that you might have for Coach Ernie, make sure you leave them in the comment section. Thanks, guys.